The following is a presentation of TFNN. It is now time for the Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Basil Chapman, Tiger Technicians Hour this May the 9th, I believe it is. It is the 9th. Yep, the 9th, and my pleasure to be here Monday through Friday, 11 o'clock until 12. And being Friday, it's the end of the week. We'll see where the markets close on the weekly basis, but we've already got New York Stock Exchange and the DIA having made what appears to be a leg C in the weekly chart. I'll get into that. Today's Technical Friday. We can get into some of the aspects, and give me 1 second. Oh, I think I understand what's going on over there. So let me do this because I'm just quickly checking out, because sometimes I get an email just before I start the show. There's a question about sex, and I'll do that. Let me just do this as well, this already, because there might be a little choppiness. And we're going to switch right away. All right, so here we go. We're going to count to 5, and I'll start the count in 1 moment. And first I'll do this, and now I'm saying, starting right now, I'm about to switch phones. Here we go. 1, 3, 4. We've got. All right. I'm not sure what I have with the what we were using. All right, we're all set. So here we go. The Dow's down 39 points at 16,511. The S&P's down 7 3/4 at 1867. The comp index, if I can just find it over here, comp index is, move this way. Okay. There. Okay, the comp index is down 20 at 4,028. Gold is at point up about $1.60 at 12.89. Silver is about unchanged at 19.11. Bonds are down 230 seconds at 136 and 430 seconds. TLT is up about 18 cents at 11.78. Did hit the 112s earlier on, and we're going to go into that. We're going to go into all these different indexes in a moment. Most importantly, the dollar is up quite nicely. It's up 47 cents at 17.93. And you remember yesterday I gave that whole spiel on the Chapman wave interpretation, the alternate count in the euro, and why. In a sense, I wasn't surprised at all with that big spike and reversal yesterday in the morning, based on a technique that I sent out to subscribers this morning. I want you to see that the most important low becomes the most important low, and there are times even though when you get an inside buy signal, as you did when the dollar and when the euro dollar currency pair made its low, April the 4th at 1.367, what happens is it had a 1, 2, 3, 4, a 5-day spike to a doji top, a doji candle, on the 11th of April at 1.390. Now look what happens. It pulls back, makes a low way above the previous low of the, did I say that was the 4th? Yeah, of the 4th, at 1.378. And then it spikes to an A, which becomes, in a sense, an A minus based on this inside buy signal, pulls back to a slightly lower low, starts another A, which goes to a B, and then there's a candle that pulls back, and it pulls back underneath all the previous lows, but way above the initial April the 4th low. So what I said is, over the years, what I've done is I've started to create a format that says, because you always want to be ready, that's why I use the phantom peak, because you always want to be ready for a peak D, which can turn out to be a fairly serious top in time and price, I'd like to be ahead of the game. And I found it was very important. I went through this in my last Master Trader series. that I want to count all the peaks, and I want to be able to identify when the lowest low is so low that any low above that is subordinate to that major low. That allowed me to say that there was a peak A, a peak B, and then a peak C, which normally would be an A, on the 1st of May at 1.388. I know a number of you have asked me about this. And then it goes to a D/B and then an E/C. But it is an E because it was a major top in the daily chart, going from a sell signal immediately to a sell mode because of the close under the 9 EMA, the fact that it was E, the fact that it made the cup formation. See, I'm identifying fractals, but within that, I'm identifying slight discrepancy in the normal, in my CD introducing the Chapman wave methodology, where I would normally say, no, you're going to start the newest A right there on the 1st of May, and then you would get a parallel A to B, which is now B, on the 6th of May. So I just wanted to give that, eyes glaze over. My eyes would certainly glaze over if I wasn't watching. So let's get out of that. It's now the price of the euro has gone underneath that low, which was a pretty serious low. Remember, I did exit out there because I wanted to show right there that was not the low bar I was counting. Okay, so enough with that. But it's really, if you are trading these techniques within the Chapman wave, these modifications of the basic technique, when you learn them, it just says, I'm not surprised. I was prepared, and that's the whole thing about my opening call. We are rarely surprised. It does happen. For instance, Monday's, I think it was Monday, Monday's decline, the deepness of Monday's decline was a bit surprising to me. Not that there was a decline, but the deepness. And I think it was Monday in the market. But we've been talking about the trading range. We've been talking about, now I can go into some more details. I've got a bunch of questions that I will deal with. Mostly, let me just get to this. In the Dow chart, which I show my subscribers every day, explaining exactly what we're looking at, let me just start off by saying, if you know my CD, there's a when I talk about the MACD and the slow stochastic, there are a couple of slides there where I talk about a flat stochastic and a flat MACD. What that implies, we've got a flat MACD right now. You had a flat MACD going into the entire mid-March to late March period, but it was a flat MACD that takes the previous signal, and that signal is the one that you have to contend with, and that was an up signal from the low of 16,046. Now we've got a flat signal, and the signal is still saying that the low of 16,015 on the 11th of April is still in effect until there's a change. So right now, your balance of power is looking at the slow stochastic, which has turned up again. And yesterday we went to a leg D, and almost certainly today is going to be a peak D. I don't see anything that can get the Dow to 10,623. 10,622 was the high. All-time high is 16,631. Now let me put this all into context, because I think this is such an important period. Let's get out of the Euro chart. I want to talk about the INDU. So on this particular chart, you had your the standard A to B equals C to D, but based on the Chapman wave methodology, there's a difference. The technique that I've developed over the past year and a half, 2 years, and tried it out a number of times, and many times, and it seems to offer at least another way of looking at that A to B equals C to D, is that there's a time constraint. The angle of A to B, where you choose to go C to D. Now, this is not the Chapman wave peak A, peak B, peak C. This is the standard one that we hear Larry talking about, that we hear Tom talking about, Steve talking about, Dave White talking about. This is a very important concept. that goes back decades and decades, that there's a measured move. The difference that I found is that if I can identify the very quick ones, the ones that have the same angle, diagonal angle, in time and price, they can produce very powerful reversals. And in this case, there was a beautiful A to B equals C to D from the 4th of April down to the low of the 11th of April. Very quick. Just 3 days down, 1.5 days up, blam. And then 3 days down again. Now look what's happening. This is very important. What we're looking at is there is a potential for the same thing to happen. There was a potential for the same thing to happen until we curved over and took our time going to D. Otherwise, I would have been able to say, I can identify, the question yesterday was posed in the den, what would be a breakout? What would be a major breakout to the upside? Not just a nominal new high, a major breakout. And I said, I don't see that right now. And one of the reasons is I took this away. I started to do it, and I said, no, I don't even want to show it because it has no relevance to my work. It could have a lot of relevance to other people's work. And all I'm looking at here is that we've made a series of arches and cups. And in this particular instance, you've got a cup formation that then went to an arch formation to the high of the 4th of April, from that low of March. I think it was about the 11th. I should remember. I just looked at it. From that low of March the 14th. Come down to the 1 month later, the 11th of April. You get to 16,015 in an arch formation. Get a very sharp reversal. You go all the way back, and then you stall. And that stalling process tells me a whole bunch of things. You remember yesterday I was saying, I believe it's now time for me to put on my opening call, Traders Corner, in that Traders Corner for my subscribers, the TVIX, just a lousy unit of trading in time. It's horrible because if you're waiting, there's an automatic, even if the price goes in the direction it would help you, there's a shrinkage in the TVIX. But you have it there because I think we're getting close in time and price to some kind of a sharp pullback. So we have no position. It's at 5.75. That's based on the VIX. But what it's saying to me is that there are aspects that are going on, and now I'm going to include a bunch of other things. I just wanted to show, I keep hitting that. I wanted to show something else. Technically, I should be able to go to an oval formation right here. But the oval formation is free and clear of the left side, invariably. And that says, yeah, you can put it in there, but it isn't a traditional chap wave stalk leg. It looks like it, and like it could be, and it might turn out to be, but normally they occur going to recovery highs. There's nothing on the left side. You see that high of 16,631? That makes this.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, the Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Investors, Taz Market Research delivers to its subscribers expert commentary on the analysis of 15 different markets each day. Get this invaluable and timely information through the daily market research videos Taz Market Research produces each day before 9 a.m. The video analysis will include reports on currencies, interest rates, indices, metals, energies, grains, and more. You'll be able to gauge where high profitability setups are in each of the markets. Receive a free 2-week trial subscription to Taz Market Research videos on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing. Basil takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
So let me just finish that thought. Usually in the break, I'm so busy with requests and things that I just keep chugging along, and then I completely forgot what we were looking at. So the pattern, yes, in a way, it does look like the stalk leg. Two things. I think it's just an oval pattern. It's not a rectangle. It's an oval. I think that it is, in a sense, going to produce exactly what a stalk leg formation would do. It ain't official. This one here is, in fact, exactly right in many ways because it was going to highs. Now, the one here that I'm looking at says, keep in mind that in a bear market, every single opportunity to go down and go double-digit down in the futures is taken. So I see this, remember yesterday I was talking about a cork in water, that it keeps rising to the top, unless it's got that pressure to push it down. That's what I'm still looking at. And I believe very strongly at this particular point, I haven't, there is nothing that I'm looking at that essentially says, watch out. But there's a request in the den, which I will get to, we've got callers waiting, so I'll do that very soon, about the IWC ETF, which I haven't looked at for ages. I used to notate it, and then I did the IWB, I think it was, because the IWM is the IWM is the Russell 2000. Let me just double check here, because I know that I'm pretty sure I've lost that chart notation on the IWB. No, I haven't. So then would you peak F in the or an alternate count B in the weekly chart, D in this is the iShares Russell 1000, and more importantly, the IWC is the micro caps. So I've done the notation and everything on it. The question was, is this a time, would you short here, do nothing, or buy? I'm going to get into that because I would probably have to answer you to do nothing, and get ready to short. It's the risk reward on a pop-up at this particular point is just a little too great. Now, let's just look at, yes, so I will get to Goldman Sachs. I will get to the other question about LinkedIn again in the den. I want you first of all go to Ari in Arcadia. Ari, how are you?
Pretty good, Basil. Technical question.
Technical away.
CLNE.
Yes.
What do you have there for the monthly count?
I used to have this notated, as you know. I've been asked about this many times, so it's somewhere in my library, but it's not popping up right now, so it'll take me just 1 second. Folks, question is CLNE, Clean Energy Fuels Corporation, trading at $9.83, up $1.01. That's 11.45% on a day like this. Excellent action. Must have had some good news out there. Let's do the monthly chart. The low bar of 28th of November at $3.23. Let me just type that in. Takes 2 seconds. 3.23. Okay, and now we go peak A, peak B, peak C, peak D, peak E. Now, without even looking at any other notation, I would have had a peak A to a peak E was the top. Let me explain what I'm looking at. Peak E was the top as the MACD double topped, but the stochastic just went straight above 80% and then straight down within a few bars. That is just a classic reversal sign. 2370 was the high. But for those of you getting used to my Chapman wave methodology, there's another technique that I use. It's called a 2-bar reversal. The very next bar of April of 2010, so that was March of 2010, 2370. April of 2010, the high was 2365, 5 cents lower. Most people would not even notice that. They wouldn't even look to see it. For me, it's very important. Why? Because it identifies a top. It identifies a lower high at peak E and says, ha-ha, be careful, keep watching this closely because it could become a top. So that's a 2-bar reversal. It pulls back. I shouldn't say it pulls back. It cascades in a bounce like a slalom track down to the bottom. And I'm going to keep doing that. And it keeps going down to $9.02. Well, I would say that's a pullback of consequence. But then all of a sudden, the stochastic and the MACD have a fabulous move to the upside. It's gone trough A, trough B, trough C, and trough D is where you often can get some kind of reversal. And what does it do? It has almost what I call a single leg A, except in this case, it was an A to a B. And at B/E, I'll put E first because that's what I need to do, it suddenly makes the Eiffel Tower turn around and comes back, and now it's gone trough A. It goes to a higher high. That's why it's called a leg E. In the end, it comes to an E/B, 24.75, $1.25. So many stocks tend to do that when they make the U-shaped pattern, and they go to just nominal new highs, and then plop, they come back because of that inverted H pattern called the Y, inverted Y pattern. So now we've got trough A, B, C, D. Oh, interesting. Ari, I'll be back straight after this. This is going to be a very interesting chart.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
Hi, folks, we're back. So the question from Ari in Arcadia was CLNE, which is a Clean Energy Fuels Corporation. I just wanted to do this September-October low in the weekly. I wanted to show something. I'm calling that low bar from the 7th of October, the week of the 7th of October. And remember, in TradeStation, this is the week that concluded on 7th of October. So at 9.02 as the low, and then it goes A to B. And now this is very interesting. It goes to a C. But if I was in this and I was analyzing it, I would have gone right here. I would have said, uh-oh, I'm calling this a Chapman Wave Phantom C. That's just the way I do it. I don't know how you get a computer to notate it, but my eye says it's so close to the previous major peak back in April, the right shoulder failure, and near the peak, that there's a little wiggle in the shorter-term trend. I want to be safe. And at this point, I would get to a D at the top. Well, we don't know it's a top. I would have got to a D right here at on the 23rd, the week of the 23rd of March 2012. The next bar gave a lower high bar. The MACD was still good. Stochastic was failing. On balance, the volume was failing. Relative strength was failing. And you had the price testing the 9-period moving average. Now, I don't know if this is a real C or a phantom D, but I'm already saying I'm going to raise my stop on part of my position and maybe keep the other if I was in low enough and see how it handles it. Well, what happens is it makes a complete reversal. If I never looked at that fractional high which went from 21.39 to 21.43, 4 cents, I would have missed it. And that's just experience. I have no idea how you'd ever be able to program that, because you just get so many false indications. But my eye said that, just as it did on the euro the other day. So now the question, Ari, I'm going to ask you the question because I've done the monthly. I'm going to go back to it. I just wanted to finish up with the weekly, because I remembered having done this quite a while back, and I just wanted to see what it does. So let me just pull this back again. Low of 323 back in 2008. In 2010, it makes a peak E high at 2370. Gives a Chapman wave 2-bar reversal at 23.65. Pulls back all the way to a trough D in summer of 2011. Then it has a single leg up. Absolutely must have been news related. Spirals to a new high with absolutely failing technicals. Gives it all back in the pattern I call the Eiffel Tower, but it's also the pattern that I call the drop bucket pattern, which is the double top, which basically is an inverted lowercase h. Think of it as a Y, lowercase y, but backwards, that's all. And there it is right there. Okay, and now what's done is when the Eiffel Tower pattern, straight up, straight down, fails and takes out, I would say if it gets close to the low, it has a bounce and then makes an arch, there's a real good chance it's going to try to test the low of 902. And in this case, it not only did that, it went to 827. Now there's a new A, and that A is the third month after the low, so it's 4 months altogether. Every other bottom that we've got here, we haven't got too many in the monthly, has had small candles with an inside bar, and it's taken 1, 2, 3, 4. It's the fifth month from the July, the June, whatever it was, August low of 2008 that started the move up, a very big move after an successful H. But look at this. The next one was just straight away. So there's no real, I don't have a history to say after 3 or 4 bars, if the low's not taken out in the monthly chart, if it takes out a certain level, it'll really move very sharply. But I can say my eye is saying that this is a, this is the, I can call it a fractal of the entire move from July of summer of 2007 into the low of 2008, starting up here. So there is a similarity, but it's on a much smaller dimension. Ari, what are you doing?
Well, on the daily, it's kind of built a nice base. And it's created a A and a B on the weekly, you know. So when we only look at it for 6 months, it's really a nice base.
Okay.
So right now, I'm kind of familiarizing myself with the feel of the chart. So
when you're doing that, I've got A from the low bar of with that. That's a volume spike of consequence. That's what. This is, well, it's not as big as the one before. What this volume bar says in the Chapman wave methodology, it's a climactic reversal low bar. And that says you should go 28, maybe even 52 bars. Doesn't matter whether you're looking at daily. It doesn't work with monthly. It does work with daily and often with weeklies. But that says that you should go for quite a while, making an H base, an H pattern, and you've got to see if there's a successful test. Let me just do that. Yeah, there it is. Okay, that's exactly what you want to look for. So how many bars would that be? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20, 21, 22, 23, 24, 25, 26, 27, 28, 29, 30, 31, 32, 33, 34, 35, 36, 37, 38, 39, 40, 41, 42, 43, 44. 44 bars, and then it takes 45, 6, 7, 8, and so at 48 to 50 bars, it starts to break out. So that's what I would call a potential for a one-to-one move from the base of 8.27 to the high of 990, so that's 827, so it's 1.5 points, and you have to take it from this low here, that's 846, so that takes you to 10, and we're at 9. Today's high was $10.10. So you've got the 1-to-1 breakout, and the most important thing is that you're right. If it holds above the 14th of February high of 1016, anytime next week, if it breaks above it and then turns the high of 990, which was the high of the 11th of March, in that area between 990 and 980 into a base, and it's able to get to 1045, 1050 in the next 2 weeks, there's a chance that it could test 1093. So I agree with you, and I would not even think about the 200-period moving average that I just mentioned as the potential high if I hadn't seen that the weekly is now into that very ugly bar of the week of the 7th of February. When any stock gets back into a major collapsing bar and shows some strength, there's a chance it could try for the high of that bar. See what happened here back on the week of the 11th of October? Opens at 1308, goes to 1325, and then plop goes down to 1063. Look how it worked its way up to get into that bar, and then it broke above it, but it couldn't hold it. So I think you're right, Ari. Good eye. The monthly, of course, as you know, is still very poor looking. But there is improvement in the technicals in the weekly and certainly in the daily. The only thing I would say to you is the whole thing gets negated in this particular pattern. If the bar that we're looking at today, if it closes anywhere under 940 in the next 2-3 days, it says, whoops, going to be a failure pattern and just making an continuous H pattern. So, yeah, it has the potential. Good eye, Ari.
I appreciate your help.
Good, my pleasure. Thanks for calling. Have a great weekend. So, folks, let's go back to the question I had from yesterday, which I didn't finish, and that is there was a peak E in the monthly chart. I think I did do that in Goldman Sachs. And it's arching around, and that makes me a little nervous because if Goldman Sachs into June is not able to clear, really, when I say clear, I mean just to take it out and look, not even look back. The 167.67 high of April, that's of last month. If it just can't do that this month, that's just not a good sign. So I'm going to sum up what I'm looking at now because I want to look at some other stock requests. What I'm looking at is that the XLF, and Goldman Sachs, of course, is a big part of the XLF, is making a high-level consolidation. I don't have any other way to count this right now other than it's probably a peak E in the XLF at 2265, week of the 21st of March. But it could be reactivated if the XLF next week is able to get to 2233. Hey, what, 50, 60 cents? That should be nothing. But it is something. It's been very tough for the XLF to maintain upside momentum, keeps giving it back. It has crawled upside, which is good, but this whole area, it looks like a coda to me, like you had your big move up to 2216 doji high, peak D on the 17th of January, pulls back, does a one-to-one from the downside to the upside, like a sine wave, then it makes a smaller one, and now it's making an even smaller one. What I mean by that, you see there's a cup formation, then an arch formation, trying for the cup formation at the same time as there's an arch formation. And we're going to see, as I say, a break above 2219 is really important, as with Goldman Sachs. In this case, it's the weekly of the XLF. A break above that level says, aha, finally we can get another cup formation to test the 2265 high of the week of the 21st of, let me put that in, 22.65. Okay? And then the low says at any point in May, it doesn't even have to be next week, but any point in May, you close, the weekly closes below 2119, let's call it 21. It's a problem. It's just a real problem. It just means you've widened the trading range, and there's a good chance you can come back to that candle of the of the XLF, the candle of the 7th of February. On a daily basis, choppy, choppy, choppy. You know that the Dow is every other day just about, it's going in a different direction. Okay, now I want to give you what I'm looking at. So the XLF is saying, yeah, it is an important index. I can't even put an up arrow here. I can only put a plus sign. It needs to really decisively break in the 2250s. So that's that. Now, so this rectangle that I drew a long time ago, see right there? It's expanded, but it's still the same rectangle formation. Trading range of formation. Now, so Goldman Sachs, I'm going to give you the numbers. Goldman Sachs needs to break above 162 to actually show that it's got enough strength in the daily chart. In the daily chart, a break below 154 to 155, sorry, 154 to 153.70, not good at all. Probably going to retest the low bar of the 11th of April at 151.65. Now, questions in the debt. We had that IWYC, was it IWC? IWC. So the IWC is telling me, now look how I'm going to put it together, that there's the same arch formation in the daily that we've seen in so many of the charts. And that arch formation could be a fantastic buy signal, but not if certain things happen. And in this particular instance, am I still on Goldman Sachs? Oh, well, okay, Goldman Sachs is the same. I was hoping I was on the IWC. IWC has a very different pattern. That was Goldman Sachs. IWC has got the pattern that says straight up, straight down, I'm in trouble. My stochastic in the weekly chart is just showing no strength at all. The monthly chart has almost certainly made a peak E, but it hasn't crossed negative. I can't put the down arrow just yet. I have to wait for the month's end. And in the daily chart, there's just the first sign of a bit of a bounce. And that's why I'm thinking that next we look at the Dow. It's now down -7. The S&P is only -3.78. Look at this chart that I drew in for folks in the den. Right at the beginning of the show, before the show began, I drew a circle when the price was down here. No, sorry, the price was over there. And I drew a circle saying that that's the level that I expected it to get to. Well, it's above that level. And the 2-minute chart, it made a low and has gone peak A, peak B, and it's one of the reasons why I want you to try to keep our longs in my opening call as long as we can, as long as possible, and anything that gets stopped out, that's fine. It's extra cash. We want cash right now. We're trying to build up a cash. We've got fewer stocks, and we are trying to build up a cash position, and I'm looking at this, and I'm saying everything about it says that by next week we should try to make new highs, everything about it. So this reversal in the E-minis is a good example. So that's the reason why I said to the Peaky in the den that I would not be looking, if you ask me the question, would I buy or would I short IWC trading at 69.52? Right now, just as a trade, I say, you know what? If you want to, I would buy it right here at 69.52. I wouldn't even put a stop under the 68.80 low. It's less than 70 cents, less than 1%. Yeah, put a stop under there, and you will know by Monday if it's going to work. And I'm just expecting it bounces to 71 to 70. I'll be right back.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foreside Fund Services, LLC.
Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com. Eastern legend tells of a fair maiden who was offered a rare gift by the king of the land, a bag of pearls. The king promised that she could keep the largest, most perfect pearl she could find with these 3 conditions. 1, choose only 1 pearl. 2, remove 1 pearl at a time, accept or reject it. And 3, if rejected, it would be lost forever. She began by looking at the pearls, passing on many special treasures. She delved deeper into the bag, and soon the pearls were replaced with pebbles. Sadly, she went home empty-handed. Folks, replace pearls with time, because we cannot go back even 2 seconds. We live in the eternal moment of now. So when now are you going to take advantage of my offer to you, a subscription to my daily investment newsletter service, Mastering Probability, where you can experience the most incredible pearls for trading and investing, the Rhodes Momentum Indicator and Strategy. The offer? It gets better. A 30-day money-back guarantee. Don't go home empty-handed. Mastering Probability. Available on the homepage of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Learn about good health and fitness. Living a Primal Lifestyle with Nico and Paige. Next on TFNN.
Folks, please listen to that show. It's coming up. It should be very, very interesting. So I had a couple of questions, and they all deal with kind of the same thing. Only if you're watching real closely can you do a little bit of buying here, like that IWC. But you got to be watching it. Why? Because if it closes near the low of the day, I don't want to be in as something that over the weekend you could suddenly get a gap down because of any kind of news. So it has to close towards the high of the day, and then you got some safety factor. Let's put it that way. So this is only for those people who are really watching closely. Look at Berkshire. Berkshire has made a peak F in the daily chart. Remember, I mentioned this the other day. I can't remember if I mentioned it here or I mentioned to my subscribers. And it had the same pattern as Alcoa, also made a peak F top. Now, one is trading at $13.25, and the other is trading a little higher, with Berkshire trading at $127.70. But all I'm looking at this particular point is that Berkshire, how it holds the weekly chart, because I've tried to count it every different way. Sometimes you get a gap up or something happens, and it really confuses the picture completely. In this particular instance, there is a doji candle last week. There's kind of a doji this week. It's holding a 9-period moving average. I don't think it's all over for Berkshire just yet. All over, I just mean in the intermediate term for a decent pullback. So I'm watching this real closely. It's got the stalk leg. There's the stalk leg formation in the monthly chart. Very strong leg E. The weekly, I can't do anything other than call this a B. It could be an aberration, but at all-time highs, aberrations are rare. So So I'm keeping that one in mind. I'm keeping the fact that there are certain stocks like that have done extremely well, but I'm not sure they've been leaders, and now they're getting hammered. Had an email just moments ago. Hey Basil, hope you're have a great tennis weekend. Well, I hope so too. Could you talk about Whole Foods WFM? I'm concerned that rich people are holding back. I believe this is a telling sign. Please explain what you might be thinking. Many thanks. Now, first of all, I put it into the rich category. I think it's the comfortable category. It's the folks that are working, that are doing the buying, that are able to go to Whole Foods and buy things. Maybe they don't buy everything there, but they do. But Whole Foods is telling me something not about a Whole Foods per se. It's telling me about something that I discussed when I said, I think we've got a peak E major top that could be a hat-trick top, and we never shorted it. Right at 65.59, immediately after that, I said, I'm smelling trouble here for Whole Foods market. Competition is the major thing, and it's imperative that you keep that in mind. So, yes, I think in a sense you're kind of right, but I also think that people haven't really cut back on the food area so much, maybe the restaurant area, but the buying of food, the specialized foods, as long as they keep cropping up. I mean, how many kinds of lettuce, how many kinds of tomatoes? It's just, it's an amazing, this is the period of abundance and excessivity that we've never seen in the history of mankind. There's nothing comparable. When they look back, I don't know what they'll call this electronic age or whatever it is, but it's like the age of the newspapers in the 1800s and the railroad. Major change in everything from the landscape to mobility, etc. The newspapers of the 1900s, plus the automobiles, plus air travel, plus everything that has to do with electricity, and then and semiconductors, and now you've got the fruition. And in the fruition state, I can't talk about it now, I haven't got time. Maybe next week I'll talk about the period of the change of the century. Every change of century has a particular coda period. We're in the coda period. So I'm looking at the Dow now, only down 4. I like what I'm seeing, but I'm expecting a conclusion to the upside perhaps next week, and then I think we get some kind of a pullback unless the momentum stocks are able to come on really strong. They don't look like they can right now. So next week's going to be a critical week. Hey, thanks for being here. Have a wonderful weekend. Check my opening calls, my daily newsletter, right on the site of TFNN, 2 weeks free. I'll be back on Monday. Have a wonderful weekend.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
This is TFNN.